For more, let's bring in Dan Clifton. He's head of policy research for Strategas Research Partners. Dan, are they going to pull this off? And is this really all just about raising U.S. taxes and making sure the money doesn't leak abroad?
Yeah, there's a couple of factors going on here, Kelly. And first, what I would argue is that Treasury Secretary Yellen has made tremendous progress in moving the ball forward on some sort of global tax agreement. If you remember when this process started, people would say, why would other countries agree to raise their own taxes? And she's slowly making progress, but we're not there yet. I think when you get into the details of what the agreement was reached with the OECD, you see that there's still some holes in the rate and the base, and those issues are going to have to be worked out over the next couple months.
So why
are we having this conversation?
Yeah.
First, Joe Biden wants to raise taxes on U.S. multinational income. They're very worried about raising taxes on the U.S. and taxes outside the U.S. not going up at the same time. So they want a proportional shift. And second, to your point in the opening about tech companies are being hit with discriminatory taxes called digital service taxes. This is a negotiation to create a new global windfall profits tax on companies that would be based on where they're located. So there's two different taxes there. One is a windfall profits tax. The other is a global minimum tax. And it is very much integrated into the negotiations with the U.S. on corporate tax reform that you'll see Congress debating over the next few months.
Well, and I'm sure there's got to be something in it for these other countries to agree to go along with it, and maybe saying, they'll pay tax based on where they sell and not just where they're headquartered as part of that handout. But reading through the structure reminds me a little bit of the founding of this country. I'm not kidding, because you have kind of the Senate and the House of Representatives. You have one area where people have a proportional representation. You have one area where it's not proportional, where it's more just based on financial heft. Let's boil this down to investors. If I own Amazon, the big tech companies, you name it, are they going to face significantly different taxes going forward?
Yeah, first, you're going to get a higher corporate tax rate as part of the Biden tax plan, separate from all of this, and higher taxes on multinational income as part of the Biden tax plan. Those two provisions will cut S&P 500 earnings next year from about 11% to 5.5%. So
wow.
That's a pretty significant cut, and that's on the compromise plan. And then you get to look at what the global tax agreement is going to be. And it's not just tech. We think Johnson & Johnson are going to be affected by this. We think it's a much broader set of tax increases, and it will be taxes largely on U.S. companies that are then being paid to foreign governments. About 62% of all companies impacted will be U.S. companies, 38% from other countries. So this is a really significant change. It will change corporate taxes. You can argue whether it's going to be good or bad, but to your point, it should lower earnings, all else being equal, if Treasury Secretary Yellen is successful, both domestically and internationally.
So I guess my final question, it would just about cut those earnings in half based on what you were saying for next year. So is there some approval required by Congress? Do you expect any pushback in the U.S.? And what about elsewhere? I mean, we've talked about some of the holdout countries, whether it was Ireland. I think Hungary was one of them. What's the status?
Yeah, so this is the big risk here. The U.S. wants to go first on the global minimum tax, could be likely included as part of the Biden tax plan this fall. And the U.S. would then impose it, but then other countries wouldn't act first. So Congress is going to want more assurance that other countries are definitely going to act on this. The windfall profits tax, which is this kind of tax on large companies, Janet Yellen is saying that won't be ready until 2022. That is a much bigger hurdle in Congress, Kelly. That is a change in tax treaties that will require 67 votes in the United States Senate. That means you're going to need at least 15 or 16 Republicans to be able to pass that through. And that's going to be a much tougher slog to go through. And I got to tell you, the European countries don't want to do the global minimum tax without the windfall profits tax. So there's a lot of moving parts here. It's very complicated. And the administration really needs everything to go right to be successful.
I understand it a little better now, thanks to your explanation, Dan. I appreciate you following it for us and helping investors understand it as well. Dan.
Shepard Smith here. Thanks for watching CNBC on YouTube.